Hi guys, Nrupin here, and in this video I will give you little information on how to make money in stock market. In my last video, stock market for beginners, I tried to explain there cannot be any one specific method of fundamental or technical investing. In this video I will try to elaborate same concept to help you understand how you can learn to invest and make money in stock market. To make money in stock market, all you have to do is buy stocks for cheap and sell for higher price. The logic is as simple as that, but procedure to do so is not as simple as it sounds. Now, either you want to invest as fundamental or technical investor, investing or trading is always three-step process. Step number one is always stock analysis. The analysis part helps in determining quality of stock and is it worth investing or not. Now, analysis is nothing more than probability, and every probability comes with only one guarantee, that it can be wrong, and therefore we have second step as risk management. With help of proper risk management, we try to avoid losses that we may incur due to failed analysis. The third and final step is strategy. It helps in multiplying profits when your analysis goes as expected. In short, strategy is real money maker in process of investing. Just by investing on analysis, you will only make profit by chance, but with good strategies, you are as good as guaranteed to make it. Remember, your job in stock market is not to remain right all the time. It is making a lot of profit when you are right and avoiding losses when you are wrong. Risk management and strategy are mostly always bundled together, but do not live with idea that risk management methods and strategies are same for both technical and fundamental analysis. They are not only different with respect to fundamental and technical analysis, but they are also different based on which system of fundamental and technical investing you prefer. Now you might have heard it several times that technical analysis is easy whereas fundamental analysis is hard and requires serious skills, but reality is totally opposite. Fundamental analysis is easy whereas technical analysis is difficult and requires serious skills. Investment industry has spent quite good effort to maintain this myth because it is beneficial for the investment industry. It scares new players from learning skills that are easy to master and force them to learn skills that are hard to master. There are a lot of fundamentally strong businesses in market, but just because a business is fundamentally strong does not mean its stock prices gonna soar. Next, we just call it fundamental analysis of stock, but in reality, when we are analyzing business for investing, we are doing security analysis. A stock is financial security, in more terms, a debt instrument security. And value of this debt instrument security keeps fluctuating, not the actual fundamental value of business. And when you buy a stock of any business, you bought debt instrument for that business, which is marketable security and can be sold and bought like any other product. Fundamental analysis of stocks is kind of not very correct term to describe how we analyze stocks. The real term should be security analysis of business, and Benjamin Graham was the only one who, as per my knowledge, used term security analysis instead of fundamental analysis. Benjamin Graham was first to introduce risk management and strategy to security analysis, and thus value investing came into existence. The risk management he introduced was better known as margin of safety, and strategy was systematic diversion of portfolio in different stocks with margin of safety. In simple words, value investing just means investing in stocks that have margin of safety. Margin of safety in stock usually means very low potential risk on purchase with very high potential rewards as returns. Now almost 90% of videos on internet tell that Benjamin Graham told to buy stock whose current price is less than its book value, which is plain stupid lie, oversimplification or misinterpretation of his work. Graham's investing system focuses on finding intrinsic value or you can say real value of business and matching it with security value, or you can say market value of stock. In his books, he only explained those factors which he considers to be important for intrinsic value calculation of business, along with how they can be used for finding good stocks. For Graham, a value stock was a business whose intrinsic value is higher than current market value of business. And one of the conditions for which an high intrinsic value stock is lower market value of stock than book value. A higher intrinsic value of business was actually margin of safety for Benjamin Graham. Nowhere in his book Benjamin ever wrote when book value is higher than market value, it is value investing. Just remember, any stock, either it be fundamentally strong or technically strong, if holds potential to deliver good returns with possible minimum risk involved, is value stock. And if a stock is really a value stock fundamentally, then that value will also appear on its technical chart. You heard it right. Fundamental analysis does not hold any authority over a stock to be a value stock or not. If that is hard to swallow, then take words of world's greatest value investing fund manager of our century, Bill Miller. In one of his interviews, he said, real value investing means really asking what are the best values and not assuming that because something looks expensive that it is, or assuming that because a stock is down in price and trades at low multiples that it is a bargain. Value funds tend to have almost all their money in low PE, low price to book or cash flow, and growth funds have the opposite. The question is not growth or value, but where is the best value? And the best value is always potential low risk with very high potential rewards. And since you can find such kind of stocks with both fundamental as well as technical method of analysis, you can be a value investor no matter which investing method you prefer. Next step is to understand what system of fundamental analysis you would like to learn and master, because it is not the system that holds power. It's the man who applies those systems hold the power. So even if you master any one system of fundamental or technical investing, you are good to go. Remember, investing just based on analysis will not help reap profits. You need proper risk management and strategy too. Personally, while investing fundamentally, I favor to invest in stocks that are currently entering growth phase of their economic cycle, along with batched over diversification strategy. The method of analysis is not money maker for me, it's batched over diversification strategy. My investing strategy allows me to systematically invest without having to spend time on monitoring my stocks regularly. Getting out of stock monitoring hassle was my main objective while investing. Depending on it, I designed my investing system. Now you might ask why I think fundamental analysis is easier than technical analysis. Because I have read a lot of books on both fundamental and technical analysis. For fundamental investing system, all you have to understand is why some particular factor is important for some particular style of fundamental investing. Once you know about them, all you have to do is find stocks that fit in your style of fundamental investing, and majority of the times it is nothing more than comparing few ratios here and there. Future prediction of market condition is not part of analysis. It is decoy used by analysts to fool people to believe what they are doing is difficult. No one can predict future market conditions, and analysis based on future prediction don't work either. And if you are watching this video, then most likely you already have suffered loss due to such future prediction of market condition. Learn from your mistake. Do not believe in any analysis that depends on prediction of future market conditions. Remember, you cannot master all styles of investing, but you can learn about them just to satisfy your curiosity or to develop investing system exclusive to your need. You can master only any one system on investing, and that is what recommended. Technical analysis is applied mathematics, and applied mathematics is harder than just comparing few ratios. You have to remember concepts, calculate probabilities, risk, and use proper strategy based on risk. Majority of books that nowadays are written about technical analysis cover only non-mathematical format of analysis. Understand a simple fact. The more maths you remove from technical analysis, the less effective it becomes. To make sure it works for you, you have to include mathematical technical elements to your analysis, else it will not work. So majority who think technical analysis is easy or does not work have only spent time understanding non-mathematical format of technical analysis. The format of technical analysis that by default is less effective due to less mathematics. Next, only analysis part doesn't make money. You also have to apply proper risk management and strategy. Without it, your investments and trades will not turn into profits. If you have slightest doubt that I am wrong, then read The Intelligent Investor by Benjamin Graham and The Profit Magic of Stock Transaction Timing by J.M. Hurst. One is Benjamin's Guide to Fundamental Value Investing System, other is Hurst's Guide to Technical Investing System. After reading, read Fundamental and Technical Investing on basis of which was easier to understand and apply. I am very much sure that majority of you would to some level understand Benjamin's Guide, which is one of the tough guides ever written on value investing. On other hand, Hurst's guide will burn hairs of majority because it is not that easy to understand and apply even for individuals who understand and teach applied mathematics. Now let's summarize this video in short. Investing is three-step process. Step 1 is analysis. It gives us probability about direction of stock price. Step 2 is risk management to avoid losses because analysis is just probability and probabilities can be wrong. Step number 3 is strategy to maximize profits in case stock starts moving as per your expectation. A strong investing system is made up of these 3 steps. Next, there can be several ways to analyze stocks both fundamentally and technically, and you cannot master all of them. So pick any one system and spend time mastering it. There is no superior or inferior method of investing. Superiority or inferiority of any method is only as good as person who is analyzing using that method. If you have mastered your method of investing, you will make killing profits, else you will kill yourself. Every investing system guide comes with its own risk management and strategy. They should be more than enough to support your analysis. Either you should go for fundamental or technical investing, depends on how good are your mathematical skills. If you are really good with your applied mathematical skills, my advice would be pick all books that teach mathematical system of investing and then master what you find most lucrative. In case you are interested in learning my method of fundamental and technical analysis, then I have courses on both on Udemy. My technical analysis course is one of the highest rated technical analysis course on Udemy, and it will also come with my personal support for 30 days if you will use link given in description of this video. As cheaper way to learn, books are already there. With that said, if you found this video helpful, then don't forget to share it. If you think it wasn't helpful, dislike button is also there. Thanks for watching this video and have a nice day.